Hello, welcome to the Joy Business Report. Coming up this morning, Economist Intelligence Unit predicts Ghana will reach an agreement with its external creditors in the coming weeks to pave way for the restructuring of foreign debt. Meanwhile, government likely to extend second round of domestic debt exchange program despite receiving significant participation in the bonds offered, and interest rates keep surging on the money market as government's borrowing spree on the domestic market continues. Details coming up. My name is Darryl Kwal. Thanks for being with us. Hello to our friends listening from Koforidua on KTU Radio. First up, the Economist Intelligence Unit is predicting that Ghana will reach an agreement with its external creditors in the coming weeks to pave way for the restructuring of foreign loans. This is disclosure from its newest document titled Outlook for Global Sovereign Credit Risk. Here's more in this report.
This will come as a piece of good news for the country, as it will be on schedule to begin its external debt restructuring. According to the UK-based firm, Ghana has advanced with its negotiation for external debt restructuring. The country, in December 2022, requested a bilateral debt restructuring under the Common Framework for Debt Treatments supported by the G20. In June this year, the government sent a non-binding working debt restructuring proposal to official bilateral creditors, signifying the beginning of a negotiation process that the EIU said it expects to conclude in the coming weeks. Ghana and 5 other countries defaulted on their loans in 2022 as public finances became strained whilst interest rates surged. The UK-based firm added that many more countries are expected to record debt default this year, and most of these countries at the highest risk of debt default are in Africa.
That was a Business Desk report. Also in the news this morning, government likely to extend the second round of domestic debt exchange program for about a week. This is despite receiving about 90% participation in the domestic dollar bonds and cocoa bills. Here's George Jaffe with more.
Based on the engagement with persons with knowledge of the offer results, they say the extension should be described as an administrative one, and not because the offer wasn't successful. This because the domestic dollar bonds and the cocoa bills had about 90% participation. However, when it comes to the pension funds, most of the fund managers wanted some extra time to properly collate the offers that have come in. Hence the need for this administrative extension. The offer, which began on July 14, has already been extended by once already. Government is hoping to restructure 60 billion Ghana cedis worth of bonds in this last round of domestic debt exchange program. That is, the domestic dollar bonds, the cocoa bills, and the pension funds. The holders of these funds are expected to exchange their papers for new bonds. Sources say based on this result, government can see that it has technically concluded the domestic debt exchange program. This should help the country in securing the second round of IMF cash by the end of this year.
George, you're fit there. Now, some investors and businesses have warned of the diversion of more foreign direct investments if government fails to introduce some tax incentives. Now, this, they say, is key to job creation to support economic growth. Chief Finance Officer of B5 Plus Group Limited, Raul Chalapati, tells Joy Business, Ghana stands a better chance to attract more investors if it continues to create a conducive business environment.
There should be given more tax incentives. The more tax incentives, you should allow more foreign direct investment into the country by giving, attractive incentives to them. Definitely, I'll tell you, I have worked in many countries, and Ghana is one of the best companies. The people are very good. They speak very good English. You are blessed with lovely beaches, very good landscape. You can invest. People can come and invest a lot of money on tourism. So there is a lot of positivity actually, and the government should come up with some sort of incentives. And I'm sure the government will definitely come with some sort of a scheme which will, boost the economy.
You had Raul Chalapati, the Chief Finance Officer of B5 Plus Group. Let's turn to the money market now. Interest rates surged to 31.08% as the government's borrowing spree on the domestic market continued. According to results of Treasury bills auctioned by the Bank of Ghana, the government got 3.45 billion cedis, 12.91% lower than the ambitious target amount of 3.96 billion cedis. Here's more.
Interest rates in Ghana rank the highest in middle-income countries in Africa. The rate, however, are lower than the inflation of 43%, indicating that the real rate of return on investment is negative. According to data from the Bank of Ghana, the yield on the 91-day bill increased by 0.61% to 26.70%. That of the 182-day bill reached 27.88% from 27.59% the previous week. The one-year bill inched up by 0.39% to 31.08%. Meanwhile, demand for the 182-day bill for the first time in several years exceeded the 91-day bill. Investors tendered 1.69 billion cedis for the 6-month bill. All the bids were accepted. Investors also offered 1.63 billion cedis for the 91-day bill, in which all the bids were accepted.
That was a Business Desk report. Turning to other news, the Liquefied Petroleum Gas Marketers Association has emphasized that it is not against the cylinder recirculation program expected to start next month. Under the new system, no consumer will own a gas cylinder but will go for a filled one at certified points and leave an empty cylinder for refilling. In addition, consumers with Ghana cards will be the only people qualified to benefit from the program. Speaking to Joy Business, Vice President of the association, Gabriel Kumi, said the government has been persuaded to operate a new model side by side the existing system, which allows individuals to fill their cylinders by themselves.
We have never stood against government policy. We have always believed that government can only govern through the implementations of policies and programs. But the details of the implementation is what we've always fought against. The current system is a system we've been operating for the past, and this is so entrenched that it makes sense that if you are introducing a new one, you go at it slowly, so you don't disorient the consumer, so you don't create any system for any shortage for the consumer in your attempt to introduce the new one. And we have been at the table with them, and we believe at the end of the day, good reason will prevail, and then we can all transition over a certain period.
Next, the Car Rentals Association of Ghana has petitioned government to exempt the group from payment of the 21% luxury vehicles tax, arguing it will hamper growth and affect the tourism sector. President of the association, Michael Sapon, said his members are disadvantaged by the tax as tourists prefer other forms of transport due to the high cost of their services. He spoke to Joy Business at the outdooring ceremony of the newly elected 5-member Executive Council in Accra.
When you take flight from Kumasi to Accra, you don't pay VAT on it. When you take VIP from Kumasi to Accra, you don't pay VAT on it. When you take STC to Tamale, you don't pay VAT, you only pay the original. But when you come to car rental to rent a car, government is